The Canadian economy has been hit by tariffs, and there's no new trade deal in sight. The U.S. economy also, of course, showing some signs of strain. Let's unpack where these two North American neighbors stand with John Rapley, political economist, author of Why Empires Fall and Twilight of the Money Gods. Thanks for joining us today.
Pleasure to be with you.
You say the U.S. economy is actually in worse shape than the Canadian economy. What are you looking at?
I wouldn't say it's in worse shape, Marilla. What I would say is that it's in, or Canada is probably in a better place to weather a cyclical downturn just because its markets are less stretched. It has a better fiscal deficit, and therefore it's prepared to, I think, absorb some of the shock that's coming. So I think that if you compare them sort of, head to head right now, you'd clearly say the American economy is stronger, but it's got a lot of signs of weakness, which I think are going to be a real challenge for it if and when the downturn hits, as is looking increasingly likely. I think the other thing, too, is that, as we saw in today's inflation report, inflation in Canada is pretty well under control, which gives the Bank of Canada a fair bit of scope to cut interest rates going into the future. That's not going to be the case for the Federal Reserve. It's going to be under a lot more pressure because inflation is still a problem there. So the United States is entering this cyclical downturn in the possible worst of both worlds, with both sort of stagflation, stagnation, and inflation. Canada has a more classic recession it's facing. And so just from the point of view of economic management, I think Canada starts in a better position. Neither of them are good. It's just, relatively speaking, it's not as bad as it might look.
How does Canada and the U.S. differ in the way they handle both inflation and interest rates?
Well, as I say, Marilla, for Canada, the Bank of Canada is fairly straightforward. It can afford to adopt a fairly loose monetary policy. There may be some disinflation going on as a result of the sort of draining of the air from the housing bubble, which could be possibly a good thing. The United States is facing quite a different situation. If anything, it has an asset bubble. That's not really the case with Canadian stocks. It's coming off a decade of fairly tepid growth, and so there's room to run. So the worry that you would overstimulate asset markets, I think, is less of a concern in Canada than in the U.S. Secondly, assuming we go into a recession, necessarily the government's deficit rises because there are a number of claims that are put on its expenses, particularly in the form of unemployment insurance. And as I said, Canada, if you look at the bond prices in Canada compared to the U.S., investors are, I think, willing to give the Canadian government a bit more room to run than is the case in the U.S., which is really quite remarkable because it's by far the world's biggest bond market and historically the most investable country. They shouldn't have any difficulty raising debt, but interest rates remain nearly 1% above what they are in Canada. And the debt issuance will probably be a lot more because its budget is already very stretched. It's got a fiscal deficit 4 times what Canada's is. So if they, on top of that, begin to have to borrow more, it's going to really start to pressure their finances.
As you know, at the start of the year, we saw investors pulling money out of the American market, looking to other international markets, for example. Do you see that still happening?
Very much so. I think it's really quite interesting, Marilla. If you look at, we keep hearing about the record highs being set in the U.S. market, and this, taken by people in the administration as being a vote of confidence in their economic policies. But if you put it in relative terms, in fact, if you put it in currency terms, the U.S. market is basically flat for the year because the purchasing power of the dollar on foreign markets of the American dollar has gone down. So if at the beginning of the year, if you'd put a dollar to work in the German market instead of the U.S., you'd be, far richer today than you would if you'd left it in the U.S. And that goes right across the board. Canada's outperforming, Mexico's outperforming. Most European markets are outperforming, some of them by a great deal. But the real star performers are actually in developing countries. Some of the markets in some of the emerging markets are rising at rates of 20 or 25% since the start of the year. And then, of course, there's gold, there's silver, there's commodities generally. Money's going, there's a huge amount of money around in the world economy, but where it's not really going, interestingly, in relative terms, is into the U.S. If anything, there's a slow leakage out of the U.S. And so that itself has got to be a concern that it's not really being picked up, but it will begin to surface more and more, I think, with the passage of time.
Do you think that Canada will get into a situation of a recession And if so, what do you think the country needs to focus on to get out of it?
I think a recession, I think, is probably almost now locked in. Economists in the U.S. are really divided about the state of the economy. Probably half of them say it's already in recession. Others say it's weakening, but it's not yet in recession. But I think a recession is looking like a very strong possibility in the U.S. In Canada, because of the added effects of the tariffs, it looks, I think, going to be very difficult to avoid. I think the important thing will be to really look for the long term. Weathering the storm, yes. The government is going to be tabling its next budget. I think the important thing is not what are the expenditures it's going to engage in to try and make the recession as painless as possible, because it's going to be painful. There's just no way around it, just the way the deflation of the housing bubble is painful for some of the people who are invested in it. I think the important thing is, what are they doing for the long term? What are they doing to build a more resilient economy that won't be 10 or 20 years down the road as dependent on one market as it has allowed itself to become? Has it created the infrastructure that enables it to diversify its trade links? Has it pursued the diplomacy that does that? Is it providing the kind of support to those firms in emerging sectors that provide a lot of dynamism, or is it doubling down on existing industries? I think that's the important thing. What is Canada doing? It comes at this actually in many ways compared to many other developed countries. In some ways, it's coming from a position of great weakness. Its economy has already been in per capita terms declining, productivity is poor, but it also has a lot going for it. And I think that if it plays its cards well, it can position itself for the longer term. It will take a while for those benefits to show up, but I think it has still a lot going for it.
John Rapley, I've got to leave it there. I'm out of time. Thanks for your time. John's political economist, author of Why Empires Fall and Twilight of the Money Gods.